Hello and welcome to today's webinar, Electronic Payments 2012. It pays to pay electronically. My name is Jim Scott, Senior Vice President and General Manager at ACOM Solutions. And today we're very excited to have Vishal Patel from Ardent Partners presenting the latest research on a paradigm shift that is taking place in the market. And that is the transition from paper-based payments to electronic payments in the accounts payable arena. Today, Vishal will be presenting his latest findings based on his research into the e-payables marketplace, and this will be followed by a brief 5 to 10 minute overview of our solution that automates that transition process. I'll be presenting that portion of our webinar. During today's presentation, we invite you to submit questions in the question box you will find on the right-hand portion of your screen. And at the end of today's webinar, Vishal and I will answer as many of your questions as time permits at the end of the webinar. Well, let me start by giving you an introduction of Vishal, and we'll get our program underway. Vishal Patel is the Research Director and Vice President of Client Services at Ardent Partners. He's a recognized expert in the world of supply management and accounts payable technology. In his career, he's worked closely with procurement and accounts payable groups, researching their best practices and advising them on how to utilize technology to improve organizational performance. He's a major contributor to Ardent Partners' research efforts and serves as the lead analyst for Ardent Partners' e-payables coverage, among other areas. Ardent Partners defines e-payables as the technologies that automate all or part of the AP process. Earlier in his career, Vishal was a research director in the global supply management research practice at Aberdeen Group, where he led and supported the coverage of many key areas, including e-payables, contract management, commercial cards, and complex category management. Vishal has conducted primary research, benchmarking, and interviewed hundreds of procurement and accounts payable organizations, and has authored dozens of reports that highlighted the strategies and technologies that enable best-in-class performance. He holds a BS in Finance and International Business from Penn State University and an MBA from Babson College. And with that, let me formally introduce Vishal, and we'll get our program underway. Vishal?
Thank you, Jim, and welcome to the webinar, everybody. Thank you for joining today. Just to get started, I'll go through our agenda for today, and it's fairly straightforward. We'll do a quick introduction to Ardent and our focus and our research, talk a little bit about the challenges being faced currently as we see it by AP departments around payments, followed by a brief look at the opportunity that is available by moving to more electronic forms of payment. And then in the second half of the webinar, it provides some key considerations to keep in mind when going through this process and some recommendations before going through a few discussion slides from ACOM Solutions. Just to provide a brief introduction of Ardent Partners, just to give you some context of what we do as a firm and where we are. Ardent Partners is a research and advisory firm focused on defining and advancing and promoting supply management and accounts payable strategies, processes, and technologies. Now we focus from a research perspective on the entire source to settle process, my focus being more on accounts payable or e-payables as we call it. But just to give you a good understanding of, the way we think about accounts payable and e-payables. E-payables we consider to be the solutions or services services that automate all or part of the accounts payable process. So which at a high level, as you can see here, includes three major phases of invoice receipt, invoice process, and invoice payment. Now that covers all of the processes that occur within AP, from receipt of an invoice, whether it's in paper format or e-invoice or EDI, to validation, matching, and approval of it, and then finally through the payment of the invoice. The solution framework that you see there is really to provide sort of dividing lines that can assist companies in understanding their current state and help in identifying specific set of goals within each of the phases without being overwhelmed with the whole entire phase and the requirements for the entire process. The last part is where we're focusing today, which is the pay phase, and this includes the various methods that are available to disperse funds today that include check, ACH, wire, card payments, and other forms. But in addition to the method of payment, this phase also includes active management of more dynamic financing features such as cash flow management, discount management, trade financing, and other such aspects. Now we talk about the opportunity that is available in the payment phase, and you know, how enterprises can benefit from moving more to more electronic forms of payment. So why should your company be thinking about a move to more electronic forms of payment? And I'll start by just discussing the different forms of payment as they are today, the major forms of payment. Now the first one, of course, doesn't really need any explaining, as it's the major way enterprises pay today. In fact, studies show that checks still comprise of approximately 70% of all payments today. But when you think of more electronic forms of payment, they've historically evolved into three major types of payments. The first one being automated clearinghouse, or ACH, and it's the name of an electronic network for financial transactions in the U.S. The ACH processes large volumes of both credit and debit transactions, which are originated in batches. And the rules and regulations governing the ACH network are established by the NACHA, or NACHA as a lot of people call it. And in our context, ACH credit transfers include direct deposit payroll or expense reimbursements, but what we're focusing on today also includes vendor payments. There are commercial card systems, which are issued by banks and other financial institutions, support credit and debit card products for use by enterprises with their suppliers. Now there's a bunch of different card types, but the two main ones in use today are purchasing cards and corporate or travel cards. Historically, these cards have been used during the purchase phase or the purchase process. However, enterprises are now using commercial cards as a method to pay invoices from which they also receive rebates. And then the last one is probably the least used method, and is the wire transfer. It's a method to transfer money from one enterprise to another, typically from a buyer's bank account to a supplier's bank account. And domestic transfers are conducted through a system which uses the Federal Reserve and its assignment of routing numbers to uniquely identify each bank. And if you're talking about international transfers, these are made using SWIFT, which is a global financial messaging system used to make payments to banks in other countries. And those are the types of payments. And this next slide really just looks at the costs of the various types of payments. Now, it's pretty clear and has been clear for some time now that checks are by far the most costly way of making a payment. Processing costs for checks are anywhere from $7 to $10 per payment, and this is high because of the labor-intensive method of processing a check. So you have AP staff members that are spending time to enter data manually, but there are also other hard costs associated with a check. So you have the printing, the mailing of the check, the postage, various bank fees, and also other hidden costs, which we'll get into later. But you can see here it's pretty clear. So the cost of the check versus, say, the ACH payments, ACH payments are much more cost effective. The costs for ACH payments are fairly standardized. However, with this form of payment, of course, you have suppliers that have to be set up to accept this form of payment, and this, of course, requires some onboarding efforts from the buying organization, which we'll also talk about later. With wire transfers, the range of costs is quite broad, and it is dependent on various factors, including the size of the payment, and these costs can vary between $10 to $40 per payment, and is really typically used for one-off large payments or international transfers. The last payment method, the payment cards, is in general for this method, the direct cost of the card transaction itself and the transaction fee is usually paid by the supplier. However, there may be within certain organizations resource or technology costs related with processing the payment from the buyer's side, and this can range between $1 and $2 per payment. So what are some of the challenges that we hear about with manual checks? We've all heard these before. I think these still hold true in today's environment where credit is tight and cash is king. You have finance and treasury executives facing growing pressure from operations to drive operational efficiency, to mitigate risk, fraud associated with the payment process. As a result, you have accounts payable departments that are looking for more innovative ways to streamline their payment procedures and doing this in sync with the rest of the organization, doing it with a reduced cost of processing, and also minimizing financial loss due to fraud or late payment fees or various things like that. But overall, it's pretty clear that checks are an inefficient process. It's tedious manual work. AP staff members are spending their time responding to lots of supplier inquiries around payment status. There's a general lack of visibility with such forms of payment, and it leads to things like the late payments, late payment penalties, and this does affect more than just payments. It does affect relationships with the suppliers that you have. And checks are also a manual process on the supplier side. So you have accounts receivable departments are oftentimes matching payments to invoices by hand and then manually entering these payments and remittance data into their corporate accounting system. So it's an inefficient process for both sides, really. And as we've seen, it's an inefficient process, and it also costs a lot. So you have the hard printing costs of checks, postage, bank fees, but then, as I mentioned, that there are several hidden costs that are often not considered, such as replacement checks or wrong addresses or duplicate checks, and all of these add up to the cost of processing a single payment. And finally, there's the lack of visibility into payment data, and this really prevents finance or treasury groups from putting in place any proactive cash management strategies, but also makes it difficult to accurately forecast the enterprise's cash position. So it becomes difficult to forecast outgoing cash and put in place cash management strategies for the future. So these are really some of the main challenges we see accounts payable departments facing with manual methods of payment. So we've looked at some of the challenges, and these are really, if turned around, are some of the opportunities that organizations have to improve this process and gain the benefits that are available from electronic payments. Now, we've seen that there are significant cost savings that can be generated, and we'll see in the next slide what that can mean for an organization. But more importantly, there is a more efficient use of resources. So AP staff members can stop spending a large amount of time responding to supplier inquiries. And for those organizations that have already gone down the process of automating the invoice receipt or the invoice processing phases, automating the payment piece can mean a higher number of transactions that are processed straight through without any human intervention. So again, this helps to, helps improve the efficiency of the overall department, helps to allow AP staff members to focus on more strategic aspects of accounts payable rather than the more manual data entry type of activities. The real benefits outside of savings and efficiency are around improved visibility into payments, as we talked about. If available, this can allow organizations to more accurately forecast cash flows. It can also help improve enterprises' ability to implement more sophisticated cash management strategies. Again, elevating AP's role in the organization from a tactical role to a more strategic role within the finance or other groups that they're part of. And of course, one of the significant benefits of electronic payments is more towards the supplier. So if successful in getting them on board, there are several benefits to them. They're getting paid quicker. They're having payment status info available to them instead of having to continuously place in calls or emails to the AP department. And lastly, also allowing them to more accurately forecast their incoming payments and help them with their cash management strategies as well. For the next slide, we're going to actually take a survey, a poll question, if you don't mind. I'm just going to, we have two questions in a row, and the first question, which I'm going to share right now, how long have you had an ACH program or ACH capability in place in your organization? If you can just take a minute, or take a few seconds to respond to that, that would be great. I'll give it another few seconds to just gather in more responses. Okay, thanks for your responses. I'm just going to share the results here in a minute. So as you can see, it's quite broad in terms of how long companies have had ACH programs in place. We have 25% have had the ACH programs in place for more than 5 years, which is great. The question I would have is how successful have you been in getting your suppliers to accept ACH payments, and what percentage of suppliers have you been able to involve in the program? And you also have, as you can see, there's 22% which have had it for less than a year. So the results are varied, and typically also what we see in our research, there are companies that have had ACH programs for quite some time, but the challenges that they faced are around getting a higher percentage of their suppliers on board and accepting these types of payments, which we definitely think is the way payments is going to more electronic forms. I'm going to share another question here. What percentage of your AP payments are ACH payments? So if you can just take a minute to answer that question. What percentage of your AP payments are ACH payments? Just give it a few seconds to gather responses. Okay. Thanks for responding there. I'm just going to share the results now. So as you can see here, what percentage of your AB payments are ACH payments, and here we can see 53%, or just more than half of those responded show that only less than 5% of their vendors are enrolled in ACH. We have 33%, which say about 5 to 15% of their vendors are enrolled in ACH. So again, so we can see here, and we'll talk about this later in the presentation, is the challenge being supplier adoption with ACH payments. And we will talk about some strategies to overcome that and to get more from your ACH payment program. Just going back to our slides here, 1 second. Okay. So, we've talked about the challenges that we have with ACH, manual forms of payment. We've talked about some of the benefits, but how can it really impact your organization? So what we did here was put together a sample business case, or a very, very simple business case, really, to show the benefit. So for example, if you take a company, call the company X, and this company processes 3,000 payments per month, which is approximately 36,000 payments a year. And they're looking to migrate away from checks. So currently, as we see in many organizations, you have a very high percentage of check payments. So let's assume they currently process 90% of payments via check, and then 5% via ACH and 5% via card. And using the cost that I mentioned earlier in the presentation, you can see that the annual cost for this, the total cost for processing payments of this makeup is approximately $231,000 a year. Now this is just taking the cost that we've uncovered in our research and using a very simple example. Now, what if the company is looking to migrate away from check payments, and what if they just took a very simple approach of cutting check payments into half to 45%, and then increasing their ACH payments to 40%, and also slightly increasing their P-card transactions to 15%. Now, how would this affect that processing cost? Using the same exact cost of processing per payment, you can see that this would reduce the annual cost to approximately $134,000. So this translates to approximately $100,000 in savings just by cutting check payments in half per year. Now, this is certainly not an amount that should be ignored, especially given the cost of or the investment involved in setting something like this up, and not to mention the additional benefits gained from the improved visibility into payment data, the higher percentage of on-time payments to suppliers, the several other benefits that are not included in that 100,000 savings figure. So the next part of our presentation is really looking at some of the key steps and considerations that need to be taken into account to get to the place where you're able to achieve that level of savings. So as we mentioned before, supplier onboarding. So one of the biggest challenge for migrating towards more electronic forms of payment is supplier adoption. And this is by far the key step to a successful electronic payment program, and has been. It's always been that way a lot of companies that already use ACH and card payments have not really seen the benefits because not enough of their suppliers are accepting this type of payment. In our perspective, it's a tough process, but you really have to be very deliberate in your attempt to onboard your suppliers. It involves a process of education to them, the right messaging to them, and communication as to the benefits for the supplier, the benefits that you're going to see in your own organization. It involves targeting the vendors and segmenting them in the appropriate way with the right messaging. You have to share enough information with the suppliers so that they know that doing this is in their own interest as well. They want to know things like that remittance information will be provided electronically and can be referenced so they can do reconciliation on their own side. That they'll have access to reviewing the payment status as and when they like, instead of having to call AP all the time. Various benefits like that need to be shared with them. Now, the next slide here shows a visual of an enablement process that we've put together. And what's important here is not really to follow the exact process that's laid out here, but that you have a process that is well thought out and a strategy to communicate the initiative to suppliers and ensure that progress is being continuously monitored. So just taking it from the beginning, firstly, what you want to do is segment suppliers that are appropriate targets for the initial launch of the program. And this may be, the top 20% suppliers. They may be suppliers in a specific category of spend that are more appropriate. But however the segmentation takes place, you want to start it off with a certain group, and then take a phased approach and include more and more suppliers as you go forward. But the second part of the process, you want to launch a campaign that includes education and communication of the program. Again, so talk about the cost benefits to your organization, talk about cost benefits to the supplier. In some cases, this might be a part of a green initiative in your organization to cut down paper, and that's important to mention that to suppliers as well. The next one is important to continuously monitor your progress, so keep track of supplier responsiveness. Have a formalized plan on the approach, whether it's follow-up emails or follow-up calls. The way I think about it is you want to consider it more like a sales process than a supplier enablement process. How many suppliers are you going to be able to close? How do you get them on board in the quickest and most efficient manner? And then the last bit is of course to enable the supplier, activate the supplier, and continue this process until you have a sufficient percentage of your suppliers enrolled onto the program. Just to look at it, take a step back and look at this as a broader approach, I guess. When you take into consideration the other aspects of the process related to the payment, you want to evaluate the remainder of the process. So if you're looking at automating payments, think about and talk to other relevant stakeholders, get their input, but you may consider automating the invoice receipt process at the same time. And if that's the case, you want to probably find a provider that provides both these capabilities, or look at 2 different providers that specialize in each. Either way, it's important to really just know what is happening throughout the process, and even extend that process to procurement. So what is their approach and communication to suppliers around electronic payment? Are they informing suppliers of your electronic payment initiatives or plans for this as they are in their communications with suppliers or in their sourcing efforts? But this relationship with the supplier really starts with procurement and is including AP. So you all want to be on the same page and have a sort of unified message to the supplier. And because of this, more and more we're seeing companies develop a more holistic approach to the entire procure-to-pay process. So instead of working in silos and really bombarding suppliers with too many things at the same time, you want to have that single message. And even if you're starting on a small project to automate one part of AP, it's important to take into consideration the longer-term goal and the vision of the program and how it will impact the rest of the process. So the visual here really just shows the process at a high level as we see it, and then looks at the different types of solutions that are available to automate each of those phases or the entire phase. So if you're looking to automate the receive and the process parts of the phase, there are a few options. You can use a scan and capture type of solution, or you can use an e-invoicing solution. In a lot of cases, it would make sense to use a combination of the two, depending on the appetite in your supplier base for using e-invoicing versus a scan and capture type of service or solution. But you also have, again, you have providers that automate the entire process from end to end, so from receive to processing and on to payment. So again, you really just want to take into consideration all the different approaches that are available when you're in your initial stages of planning. So now we'll just give you some recommendations before handing it over to Jim to go through some slides around ACOM. So clearly, we've seen a lot of value in automating payments. There's a lot of savings, but not only that, in many organizations, AP is one of the last departments to benefit from automated processes, and this really has prevented AP staff members from doing more than very basic processing and data entry work. And so what are some of the things to do to begin to accelerate your AP transformation? And one of the first things to do, and if already not done so, is to work to define the AP department and standardize the processes throughout the entire organization. So from invoice receipt to processing through to payment, different regions or different business units may be processing payments in different methods, in various forms of payments. In order to benefit from automation, there really needs to be standardized. And in some cases, you may want to consider centralizing the management of that entire process, the payment process. Now, in order to get started specifically with a payment automation, one of the quickest strategies to gain budget and to gain alignment for an initiative around this is to develop a sound business case for investment that targets annual cost-saving benefits that we saw earlier. You want to include in there the cost of the investment that for the proposed solution, but also include key information that provides the ROI of the solution. So present a business case that provides a reviewer or approver with enough information and enough financial information that allows them to see the benefits of such a solution. And also during this initial stage, it's important to involve other stakeholders in the process to define your solution requirements. So you may want to look to finance or treasury to help assess opportunities to develop a more proactive working capital management program. You can work with IT to develop a portfolio approach that seeks to optimize the usage of different or existing software or platforms within the organization. And then, of course, you want to engage suppliers to leverage their experience and preferences. And the last part, the supplier, as I've mentioned over and over again, is possibly the most important when it comes to electronic payments, because really if they're not on board with the initiative, it's not likely to succeed, and you're not likely to see the savings that you may want to see. Therefore, a key part of the strategy, as mentioned, is to develop a supplier adoption strategy that is well thought out and thorough. It should contemplate the segmentation, targeting of suppliers, as well as that education and the correct messaging that we mentioned. This process can be quite a burden on current resources. So whether it's your AP department or your procurement department that is tasked with onboarding suppliers, it can be quite a burden and quite a tedious process. So we would recommend that you seek out third-party onboarding services or third-party tools that help manage the process instead of using Excel spreadsheets and other manual documents. There are better tools to help with the enablement process and help manage it properly. And then lastly, it is important to set conversion targets. So are you looking to save 100,000 or 200,000 per year with this move to electronic payments? And if that's the case, how are you going to get there? What makeup of payments is going to deliver that savings? And also you want to set multi-year targets. So whether it's a target for your savings, so for year 1, 2, and 3 that you want to achieve, or it's the number of suppliers that you want to onboard in year 1, 2, and 3. It's just important to have those goals set and then to continuously monitor that progress. So that's it from my side of the presentation. I'm going to hand it over to Jim here, who's going to go through some discussion on ACOM solutions.
Okay, in this portion of the webinar, we'll discuss some of the impediments to implementing an e-payment solution, and we'll also show how this can be addressed head-on. The ePay Suite is an ACH vendor onboarding solution from ACOM Solutions. As a way of a background, ACOM is a 28-year-old privately held company located in Long Beach, California. Our focus is on AP automation, providing software and services that address many of the issues that Vishal talked about today. The first question that comes up is, as we saw from the survey today, the results showed that 86% of the attendees today have less than 15% of their vendor payments being made via ACH. And the question is, why is this the case? Why is it so low? And the reason, surprisingly, is it's not technology. As we saw, most companies already have ACH capabilities, and in fact, most companies already have email capabilities, which certainly couldn't be used for remittance detail, but they're not. And the challenge is really the time, the cost, and the resources that are required to enroll and manage your vendors. It actually takes an effective outreach campaign to educate and communicate with your vendors and to convince them of the benefits to receive ACH payments along with e-remittance. And as most people have seen, because almost every company that we talk to already has ACH, and our dialogue usually goes, do you have ACH? Yes. How long have you had it? Number of years. What percentage of your vendor payments are being made via ACH? And we get the results that we saw today. And as Vishal pointed out, you really need to target and segment your suppliers or vendors and then engage in an educational and communication program in order to help those vendors understand why it is in their best interest. Okay. And what's really interesting is that you would think the adoption would be higher, particularly because there's such a compelling ROI. When you look at the numbers that Vishal pointed out, if check payments are going to cost somewhere between $2 and $10 per payment, and an ACH payment cost is somewhere between 10 and 50 cents, a very clear ROI exists. In fact, it's one of the clearest ROIs that you'll ever run into. So given that that's the case, what's helpful is to look at the end game. If you can address the onboarding issue, what's the result? And the result is very clear. We offer a solution that addresses that. ACOM has a solution known as EasyPay Suite, which is a unified payment platform that provides, number one, a blended payment format output. What we mean by that is, for most companies, as you engage and embark on this transition to move your vendors to electronic payments, you're never going to get to 100%. There are some vendors that will always require paper-based payments. And you're going to need a solution that will do that. Secondly, you've got to have the integrated banking services. That's things like Positive Pay, ACH itself, etc. Thirdly, security. Things like Positive Pay, second-level approval, secure alerts, things like that. And then the key is really what we call vendor services. And this is the key to driving your vendor enrollment from current levels of 15% or 20% up to levels of 40 or 50% or higher. And as we've seen, it requires education and communication with your vendors to get there. But if done effectively, that process can be automated, and that's what vendor services does. Okay? It's not about providing an ACH module or an ACH capability. It's about automating that vendor onboarding steps so that you can achieve the higher adoption rates effectively and economically. Okay. The way we do that is that we automate the process, the communication process. This is triggered during the disbursements process. This is the portion where your education and communication efforts take place. We can provide messaging on paper-based payments via email, etc., so that your vendors receive the communication that they need. Secondly, we provide a vendor portal, and this is where the enablement process takes place. This is where vendors can go in, provide their, actually accept the ACH authorization that needs to take place or it needs to be put in place. And what this will do is automate what heretofore has been a paper-based process, meaning to get most vendors on ACH, you've probably gone through a process where you've sent an ACH authorization form or faxed it, had them sign it, bring it back. It's a very cumbersome process, and the vendor services will address that. In addition, the vendor self-service portal also is how you obtain accurate and current bank and remittance information from your vendors, because they input the data, you stay current, and this is also where vendors go for inquiries. And so if a vendor has a question about a past payment and needs to look at remittance detail, you're now providing 24/7 access to your vendors, and you're reducing the number of phone calls that's coming into your AP department. So let's take a look at a couple of quick screens, which I think will give you an illustration of how this is done. What you're looking at here is an example of the type of messaging that we can do that can be sent electronically or printed on the remittance portion of your checks that goes out to your vendors. This can be edited. This can have your own messaging on there. And the key to this is that it's done automatically through the disbursement process. On this screen, this is where vendors go to enroll and update their information. I'll show you in a moment the actual enrollment process, but this is where vendors can input their banking information, their remittance preference, etc. What's nice about this is that the Easy Pay Suite stores this data and uses it during the disbursement process. This is one of the reasons why the unified payment platform architecture with a single database is so important. What that does is all the information that you need is available at the time you go to process payments. And keep in mind, many of the legacy systems out there were not built to house banking information from their vendors. This allows you to store that information and use it when payments are processed. Okay. This is a screen that shows in the portal where a vendor would go. Once they've received the communication, they've made the decision that, yes, they want to go with ACH, they can simply use this online form to register for an ACH payment, and you thereby completely eliminate the sending of an ACH authorization through the form, through the mail, or via a fax. It makes it cleaner for your vendor and cleaner for yourself. Okay. And then finally, this is an example of improving the service level to your vendors. Rather than having a vendor call you to inquire about whether a payment was made or whether a particular invoice was paid, they can have 24/7 access to this historical archive, and they can look up past payments, and they'll actually see an exact rendering, a PDF rendering of the payment with the associated remittance detail. This improves the service level to your vendors, and it also cuts down significantly on the number of inquiries that's coming into your AP department. Okay. In the interest of time, we have kept this very high level. Our goal here was to provide education and not get into a detailed product description. I'll summarize by saying this is a software solution that is a unified platform that gives you the printed laser check capability as well as ACH capability. In terms of remittance detail, that can be sent via secure PDF via email. It can be done via fax. It can be done laser printed. It can be posted to the web. The portal portion of the solution gives your vendors the access they need to understand the benefits of an electronic payment. It gives them the portal to look up past payments. So you're taking advantage of the process of enrolling and onboarding your vendors. And the key point we want to emphasize is that onboarding process where you reach out to your vendors and educate and communicate is automated. It's a byproduct of the disbursements process. Those vendors that receive the most payments are going to receive the most messaging. And it's a way of really getting to the 80-20 rule, that 20% of your vendors may be responsible for 70 or 80% of your payments, a way of getting them efficiently. Okay. So at this point, what we'd like to do is open this up to some questions and answers, and Vishal and I will answer these as best we can as time permits. So let me start with the first question came in. Vishal, this is for you. What's the biggest barrier companies face when moving towards electronic forms of payment?
Sure. Yeah, I mean, I think the biggest barrier is, by far it is getting suppliers onboarded and getting suppliers to adopt the electronic form of payment, whatever it may be. And that's pretty clear. But I think another one is just internal change management, is to convince the appropriate people within your organization that this is a worthwhile effort. It is something that will generate cost savings, but also will have an impact on the entire enterprise in terms of just better management of payments to suppliers, improve visibility into payments, and will have just trickle effects in terms of relationships to suppliers and other benefits throughout the company.
Okay. Thank you. We have a second one, Vishal, also I think directed to you, and that is, you mentioned taking a holistic approach. What advice would you have for a company that is just beginning an AP automation initiative that involves both invoices and payments?
Yeah, sure. I mean, so we've done quite a bit of work in terms of researching this and providing tools and templates that will help AP organizations just starting to look at these initiatives or in the process of them. One definitely piece of advice is, do your research and do your due diligence in terms of what stakeholders are important to be involved in this process. Because without them, you might get, a little bit through the process, but you will see roadblocks towards the end of the process or in the middle of your process. But it is important to just get stakeholders' opinions, and that's a strategy used to gain approval and gain adoption throughout the enterprise is just to involve more stakeholders and get their input into any initiatives around automation, whether it's invoice automation or payment automation. But the other thing is also to, again, take a long-term view of where you want the program to be. So even if you're starting off by just maybe outsourcing the front-end image capture of invoices, just take into account what the longer-term view is. Are you looking to migrate them to electronic invoices? Are you looking to then have an automated workflow and approval tool, and then allow for electronic payment? Just all these things, the first decision you make will impact all the other consequent decisions that come in your plan.
Okay, thank you. Next question is, I've read about segmentation as it relates to vendor payments. Can you explain if and how this would apply to your vendor enrollment process? In that one, the customers that we've worked with, what we recommend is that they segment their vendors based on your goals. And what we mean by that is, I'll give an example. Some companies will segment their vendors by number of payments processed per month or per quarter. And you'll see companies say, okay, here's my top 20% of my vendors that are responsible for X percentage of payments. And these may be vendors where you're making multiple payments per month. It could range anywhere from 3 or 5, or it could be 10, 20 or more. And that might be segment 1. Segment 2 may be a group where you're making 1 payment per month. Segment 3 could be vendors. These could be contractors, consultants, where perhaps you're making payments once per quarter or less. The reason for the segmentation and how it's used is that some companies will set targets or goals by segment. So, for example, rather than saying, I want to move 70% of my payments to ACH, what they may be saying is, within my segment 1 vendors, I'd like to get 80% of them onto ACH, or 90% of them onto ACH, because that has the biggest financial impact on my enterprise. Within segment 2, it may be perfectly acceptable to have a target of 50% moving to ACH. And then in segment 3, there may be no target or very low target because the financial impact is so low. So with respect to the question, the purpose for segmentation is number 1, to really analyze your vendor and your payments and how they're spread among your vendors. And then number 2, select targets or goals that are aligned with management. And then it becomes much easier to track your progress with management. And sometimes just an overall what percentage of payments are being made electronically with the electronic remittance is not sufficient. If you can drill it down a level and report and measure by segment, that may have more meaning, and it may tie much more closely to the financial impact this will have on your organization. See, next question. Can your solution be used for other types of payment applications besides AP? And I'm guessing here the question may relate to payroll, advice, and deposits. The answer is yes. Although today's focus was on accounts payable automation, the enrollment process, the use of ACH in case of payroll is a direct deposit, but it's a form of ACH. The remittance detail in payroll is known as an advice to deposit, and this system certainly can be used in that type of application. Okay. Let's see, next question. In the webinar, you mentioned the cost to print and mail a check versus the cost to generate an ACH electronic payment. Are there any ROI tools that are available, and how can I get access to them? Yes, actually, there are some very good ROI tools. We have a couple of them, and if anyone is interested in an ROI tool that you can use independently, meaning yourself, to do a quick analysis in terms of what the financial impact to your organization would be by moving, you can set the percentage level. If I can convert 20% or 30% or 40%, yes, we have some very handy tools that would allow you to do that, and you can use your own cost figures and your own target figures. So the answer is yes, just let us know. We'll be happy to send it to you at no charge. Let's see. We have a couple more questions, and I think we have enough time for one or maybe two. Let's see. Is there a Canadian version that works with the Canadian banking system? Yes, this system does support the Canadian ACH format, so the answer to that question is yes. And it looks like we hit the 12 o'clock time frame. On behalf of Vishal and myself, we'd like to thank everyone for attending. We appreciate it, and our contact information is up on the screen. If you would like to contact Vishal or myself, please feel free to do so by email or phone. We'll end the session now. There will be a brief survey that we would encourage you to complete, which will let us know if the content of this webinar was in line with your expectations. Thank you very much.
Thank you.